The written record system was the most powerful solution humanity found against the weakness of human memory. Humans die, forget, confuse things. But writing remains. This is what made debt stronger than death, what made words last longer than time. This was the first great leap of the economy. If memory fails and debt exists only in the minds of two people, after one dies, who owes whom? How much? This is where the real issue lies. This is not merely a legal question. This is a question posed to civilization itself, because the answer leads us to the state, to taxation, to banks, to contracts, to capital. Why is modern finance built on a record? Why does everything begin with writing? Because if there is no record, there is no system. If there is no mark, there is no order. Writing is the invisible pillar of the economy. Everything built without it eventually collapses. Before written records, an economy did exist, but its memory lived only inside humans. If there was debt, only two people knew it. Only two people. When one of them died, half of the debt went into the ground with them. When one of them forgot, disputes began. When one of them lied, there was no proof, because memory is invisible, and you cannot look at memory and distinguish truth from falsehood. This system worked in small, familiar communities, because social pressure punished liars, honor accounts, paid, lost debts, and collective memory filled the gaps of individual memory. But when communities grew, when trade gained distance, when debt relationships formed between strangers, this system collapsed overnight. You could not trust the honor of a stranger. Social pressure did not work at a distance. Death erased debt. The economy wanted to grow, but memory was holding it back. Around 3400 BCE, in the city of Uruk, an official carved a few symbols onto a wet clay tablet. These symbols were among the first written economic records in history. There was no poetry there, no philosophical thought, just numbers. How many jars of barley arrived? How much was distributed? How much remained? That tablet was a report. Humanity's first written document was not a work of art, but a balance sheet. When you accept this fact, your perspective changes. Writing was born from practical need. Writing did not emerge for poets, but for accounting. The pen was not a tool of inspiration, but of debt. Humans began to write not so that words would not disappear into the air, but so that accounts would not be lost. In other words, the starting point was not emotion, but order. At the root of writing stood not appearance, but record-keeping. The result of this invention was felt immediately, because debt written on a tablet was no longer dependent on mutual memory. That debt had gained a third existence, a physical document that could be stored, transported, and presented in court. This third existence changed everything. Now, when the lender died, their heir could take the tablet and make a claim. When the borrower denied it, the tablet spoke. When disputes arose, the archive was opened. Memory no longer depended on humans. Memory had passed into clay, then into papyrus, then parchment, then paper, then digital servers. But in every transformation, the core function remained the same, to make the memory of debt last longer than a human lifetime. In Sumer, the temple economy took this to another level. The temple was not merely a place of worship. It was the region's largest financial center. Grain was lent and taken back with interest. Land was leased, payments were recorded. Workers were given rations. All of it was documented. Every transaction was inscribed on a clay tablet. Today, archaeologists have found tens of thousands of such tablets from Sumerian cities. These are not merely interesting objects for history. They are the first contract archives. They mark the beginning of written agreements. The roots of modern contract law lie there as well. Many speak of Roman law, but the Roman system did not arise on its own either. It is the continuation of a much older written contract tradition, and the beginning is that record on a clay tablet. The concept of interest itself was not possible without a written record system. In oral cultures, simple interest could be calculated, but tracking it, calculating compound interest, and establishing long-term debt relationships was almost impossible. When written records arrived, interest was put into documents. Interest recorded in documents could be tracked. tracked interest could be applied without dispute. Sumerian legal texts speak of interest ceilings, which means that interest had become so widespread that the state felt compelled to regulate it. The need for regulation is an indicator of the size of the system. Beneath all this scale lay written records. Without them, interest would have remained an abstract concept and would never have become a systematic financial instrument. The Code of Hammurabi pushed this history even further. In 1754 BCE, the Babylonian ruler Hammurabi had his laws inscribed on a stone pillar. A large part of this code concerns commercial law, debt terms, interest ceilings, penalties for contract violations. The fact that these laws were written was a fundamental change. An unwritten law lies in the personal judgment of the judge. A written law can be applied equally to everyone. This equality accelerated economic activity because knowing what the law is makes it possible to calculate risk. Calculating risk makes investment possible. Investment grows markets. The Code of Hammurabi is not only a turning point in legal history, but also in financial history, though very few people see this connection. Egypt expanded everything with papyrus. Writing no longer remained only on clay tablets. Papyrus was light, easy to transport, and could store more information. This may seem like a detail, but in economics, details sometimes change everything. Clay was heavy and stayed in place. Papyrus moved. It became possible to send documents over long distances. When documents could travel far, long-distance contracts also became possible. People could lend without meeting face-to-face, sell goods, sign leases. This expanded the boundaries of the economy. Trade was no longer confined to a single market, but was built between cities and countries. Income from papyrus became one of the main pillars of Egypt's power. Writing material was not a simple tool. It was a strategic resource. This logic has not changed today. What papyrus was then, data centers are today. Whoever controls where information is stored also controls the flow. The Phoenicians' alphabet democratized the written record system. Sumerian cuneiform consisted of hundreds of symbols and required years to learn. Only specialized scribes knew it. This monopoly made financial documentation expensive. The Phoenician alphabet consisted of 29 symbols and could be learned within months. This simplicity opened writing to merchants, craftsmen, and ordinary people. Written records were no longer under state monopoly. Every merchant could write their own contract. Every craftsman could keep their own accounts. This democratization sharply increased the scale of trade. Written records passed into the hands of the masses, making it possible for the economy to expand in a truly broad sense for the first time in history. In medieval Europe, the written system remained in the background of the stage, but stood at the center of power. The scriptoria of the Catholic Church, rooms where monks silently copied texts, were not only places where religious books were written, they were also document vaults, land deeds, debt receipts, trade agreements. All were stored in church archives. This is not a trivial matter, because whoever holds the documents tells the past, and whoever tells the past determines who owns what. They also hold the power that defines property. Written records were the invisible pillar of the church's economic superiority. That pillar was not visible, but the building stood on it. Without it, the system built upon it would have collapsed long ago. Italian merchant banks took this power to a secular scale. In the 12th and 13th centuries, merchants of Florence, Venice, and Genoa invented the first tools of modern finance. The bill of exchange, cambio, is the brightest example. A merchant signed a bill in Florence. That bill was carried to Constantinople. There, another merchant saw it and paid a specified amount. This operation meant international payment without transporting physical money. Heavy, risky, expensive money transport gave way to light, fast, secure paper documents. But the entire system rested on one thing: the reliability of written records. Without that record, the entire system would have collapsed overnight. It is often said that the power of the Medici Bank came from political connections. Connections played a role, but the main issue was something else: their accounting system. The Medici were among the first major financial institutions to systematically apply double-entry bookkeeping. Every transaction was written in two places. One receives, one gives. Nothing remained one-sided. What did this provide? The ability to check balances. If balances can be checked, fraud cannot hide. When fraud decreases, trust increases. When trust increases, larger sums circulate and bigger operations become possible. This system was behind their control of Europe's financial flows. But that system did not arise out of thin air. Without a culture of written records, it would have been impossible to build such a control mechanism. So we arrive at the same point again. Behind power stood a system. In 1494, Luca Pacioli formally documented double-entry bookkeeping. This documentation itself was a revolution, because once a system is written down, it can be transmitted. A system that can be transmitted can spread. A system that spreads becomes standardized. A standardized system makes comparison possible. Comparison is the foundation of financial oversight. The intellectual roots of the modern accounting profession, audit systems, and financial reporting lie in Pacioli's book. And that book is the logical result of the development of the written record system that began 1,000 years earlier in Sumerian temples. History is a chain, and its links are connected. The opening of the Amsterdam Stock Exchange in 1602 was the greatest economic leap of the written record system. Shares of the Dutch East India Company began to be traded. This marked the opening of the world's first modern stock market. But for that market to function, one thing was required: written documents. A share was a piece of paper. That piece of paper represented property rights. Rights were written on paper. Paper could be transferred. Transferable rights could be sold. Sellable rights created markets. Markets attracted capital. The Dutch East India Company was the world's first large corporation. Its existence was based on the reliability of written records. Without that trust, no investor would put money into a ship they had never seen, a port they had never visited, or a captain they did not know. The history of the state budget is essentially the history of written records. If you want to collect taxes, you must first know who owes how much. To know this, record keeping is essential. The Domesday Book, a property survey prepared in 1086 by order of William the Conqueror, was the first major document to systematically record land and property across all of England. Once this list was completed, the tax system began to function more precisely. Hidden property was revealed. Tax evasion became more difficult. State revenue increased. As revenue increased, the state could undertake larger projects and finance broader initiatives. The Domesday Book is not merely a historical document. It is one of the foundational steps of financial infrastructure. Writing once again quietly showed its power and was precisely what kept the system standing. The financial hegemony of the Rothschild family in the 19th century most dramatically reveals the power of the written record system. The Rothschild family placed brothers in 5 major European cities: London, Paris, Vienna, Naples, Frankfurt. These brothers constantly corresponded through encrypted letters. Those letters transmitted market information, political news, and government decisions in real time. This written information network ensured that the Rothschilds were always one step ahead of their competitors. They learned the outcome of the Battle of Waterloo before the London market and took positions accordingly. That day, the family multiplied its wealth several times over. But the secret of this success was not courage. It was the written information system. The speed of record keeping had turned into power. The modern financial system is essentially a massive recording mechanism. The balance in a bank account is a digital record. A payment you make with a card is a digital record. A mortgage contract is a written promise. A government bond is a written obligation. Every trade in the stock market is simply a record. Today, these records are stored in data centers, processed by algorithms, and protected by the most powerful computers. Technology has changed, speed has increased, scale has grown, but the work being done is the same. What that mark carved by an official onto a clay tablet in Uruk was, what today's systems do is the same, only faster, broader, and more stable. 5,000 years have passed. The form has changed, but the logic has not. The function remains the same, to preserve records, protect accounts, and keep the system standing. everything is the same. The 2008 financial crisis showed the dark side of the written record system to the world. Mortgage-backed securities were complex written documents, but the real risk within those documents was recorded. It was just recorded in an invisible place. Insurers, investors, and regulators could not see the true picture inside those written records. When the system collapsed, millions lost their homes. The lesson of this crisis is this: the written record system is reliable, but only when it is transparent. When transparency disappears, written records become tools for hiding power. The Sumerian officials' tablet was transparent. Everyone could see it. The documents of modern derivative financial instruments were not transparent. Only those who created them understood them. As a result, the answer to the original question becomes clear. Without written records, it is impossible to make long-term plans. A plan means a promise to the future, and a promise must be remembered. Human memory can carry this only for a lifetime, but when life ends, the promise ends too. Written records made promises immortal. Immortal promises laid the foundation for long-term planning. Long-term planning made capital accumulation possible. Capital accumulation strengthened the pillars of civilization. One tablet, one symbol, one record, it all began here and continues from here today. Think about two questions. Answer them in the comments. If all digital records disappeared overnight, banks, contracts, property deeds, how many days could the global economy remain standing? And where would the first collapse begin? Throughout history, those who monopolized written records, the church, the state, banks, technology companies, this power has always concentrated in the same centers. Do you think this is a coincidence or an inevitable law of the system? Write your thoughts in the comments. Every answer sheds new light on the topic. If you want to explore more deeply the moments in history that influence finance, that are not mentioned in textbooks but changed everything, subscribe to the channel. Every week, unseen history, forgotten economic revolutions, and hidden financial truths are revealed here. And one final question. In your opinion, which invention or discovery has most shaped financial history but no one talks about? Write in the comments. You choose the next topic. Whose?